What's good, traders? Welcome to another day in the bootcamp. If you're new to the channel, make sure you like and subscribe. If you would like to join my community, make sure you click the link in the description below and join the community. Today, guys, we're going to be talking about one of my exit strategy or exit plan that we have, okay? And I think I'm gonna spread this out onto like 3 different videos because I have like 3 different strategies to my exit. And I think everyone who places a trade should always have some sort of exit plan. You can't just place a trade and hold it for as long as possible and expect to get results, because market can reverse on you, especially if you're a day trader. Like, market can reverse on you and you could be up in profit, however much profit you're in. And you can say you made $1,000 in this trade, but if price hit your stop loss and you lost $100 within that trade, that is the outcome. And so I want to just speak upon your trading strategy when it comes to your exit plan, okay? Because a lot of us believe that, a lot of us are successful. A lot of us have good successes when it comes to trading. We have good trades. However, a lot of us either over expect the market, or we try to hold the trade for a little bit longer. We try to be greedy, and then what happens is you end up losing the trade, or you end up closing on a lower price. Now, the way I look at things is there's only 2 outcomes when it comes to the market, right? There's only literally 2 outcomes. And the way I look at it is 1 and 2, you either win or you lose. Okay, that's the only 2 options that I give myself when it comes to the markets. I don't give myself anything else. I don't say, obviously later on the parts, I'm going to try and create 3 parts like I said, but just for simple basis, I will say we win or we lose. Okay, now of course you might have break-even trades as well, but just for example purposes, you either win a trade or you lose a trade. When you lose a trade, you are, let's just say, minus the dollar sign, right? Minus money. And when you win, you have plus dollar sign. Hopefully your wins are positive and is not negative, okay? And so you need to think, guys, which one would you like to choose? Would you like to lose or would you like to win? Of course, all of us are going to say win. However, how do we expect ourselves to win if we don't have an exit plan? A lot of us stress on our entries and we forget about the exit. We literally forget about, okay, where's our targets? Where do we want to, look out for? What area? What's actually happening within the market? So this is where you can do 2 things, okay? You can either have a set rule with yourself that, okay, I am going to exit at these 3 levels, whereas either 1, a key level, number 2, next liquidity level, okay, or number 3, at a dot, okay, or something to something risk to reward. So I'll probably put just 1 here, right? Sunday to something risk to reward, okay? So for example, let me just actually put in brackets, for example, 1 to 3 risk to ratio, okay? So when you're looking at the market, a lot of us can have these 3 kind of outcomes: either key level, next liquidity level, or at a certain risk reward. Okay, not all of us can. For example, if I had my stop loss really, really tight, let's say just here, not all of us wants a 1 to 6 risk reward ratio. We think that that's a bit too large, so we'll probably just go for a 1 to 3, let's say, which is still not a bad trade. Obviously, you missed out on all of this, but we're still grateful with the outcome of the trade. Now, the way I do my trades is these are my three levels that I want, okay? So for me, my rules are, my win has to be either a 1 to 3 risk ratio, which lines up with a key level, which also lines up with a liquidity level, okay? Okay, for me, I have to have all 3 of these put together to give me a solid exit plan. I can't just say, okay, 1 to 3, but it's nowhere near key level and nowhere near a liquidity level. Because let's say, for example, for this specific trade, okay, the key level is here. That's a negative R, right? That's not even a positive R. So I physically can't do this. Okay, where's the next key level? Well, the next key level is, well, if this is 27, so it'll be 25, let's say. So 25, this is like a quarter level. Where is that close to? Well, it's close to a liquidity level. I'll probably just go to the liquidity level on a 2 hours, 1 hour as well. Liquidity level, right? So it's very close to a liquidity level. It actually puts me above a 1 to 3, so I don't mind targeting here, right? Because I guarantee know that price is going to get to 25. However, I would like to target the liquidity level because it's closer to me and it still gives me that 1 to 3 risk to ratio. So you guys can see that when it comes to your trades, we have the two outcomes. We understand that when it comes to the win, we have key level, next liquidity level, and at a 1 to 3 RR. Okay, those are my three like confluences for the exit plan. Now that's for a win. We also need to anticipate, what if we lose? What if the market decides to go down to my stop loss, right? Where do I keep my stop loss? Well, one single rule: stop loss at previous lows. Okay, simple. Stop loss at previous lows. So for example, here you can see that my stop loss, this is the low. Okay, my stop loss is a few pips below the low. Okay, and if I just drew this, a few pips below the low. Obviously you can't really see, but it is a few pips below the low. Okay, and so that's the only rule I have when it comes to my loss. Okay, you can see that the win, we have like a little bit more confluences because I want to take advantage of the win that I have. But then my stop loss is at a clear gateway of, if price does come down, I know that, okay, cool. My exit plan is just stop out at a previous low, okay? A lot of us are kind of doing the opposite. A lot of us do this first. And bearing in mind, guys, before I actually get onto that next point, make sure you put out your stop loss first, okay? I'm just going to put this as a keynote, okay? Keynotes. Always place your stop loss first, okay? You can always have your take profit at a certain level, okay? But your stop loss always has to be a set, foundation to your trade. So always place your stop loss first. I don't care how fast the market is moving. I don't care what's going on in the markets. Always have your stop loss, guys. That's one level of you becoming a better trader, is having that stop loss. Sometimes you are scared, you're afraid to have price get to your stop loss. But the thing is, guys, that's part of the game. You're going to realize that you rather cut your losses short and have, your risk reward at 1 to 3, or your wins a little bit larger. But you rather that than, let's say the market is going down. The market has now market has broken this level. Market has broken this level, retested, it's continued going down. You could have got an opportunity here. But if your stop loss was all the way down here, you've just missed out on a whole sell, and you have a really bad RR, and you're risking way too much on a singular trade. Whereas when I have it here, it's like, okay, I know that if price goes below here, most likely we are bearish and we'll most likely come to this level. So anything, I can come out of the trade, wait for a trade to come down to here, have a look at price action. If anything, probably enter again over here, giving me a better position to enter and obviously a larger take profit. And as simple as that, right? But a lot of us do the opposite. A lot of us put our targets ready, we have our entry ready, but we don't know where to keep our stop loss. So that's why I have a fixed rule. My fixed rule is always going to stay like this. It's never ever going to change. And in my Discord server, I literally showed, I showed them all my rules that I had all the way back in 2021, and I still use it to this day. And so they all can see this, right? They all can see the rules that I use. And so now I have a set stop loss, which we have to have. If I don't have it, it's not a valid trade, and I'm not going to place a trade. Okay, so making sure you always have a set stop loss, always put in place. Doesn't matter if price hits your stop loss. Remember, we already know there's only two outcomes: either win or you lose. Okay, and you shouldn't be afraid of losing. The way I explain to my to other traders, and I'm going to explain it to you guys as well, is imagine that every time you place a trade, that money that you're risking is already out of your account. Like, put that into your mindset. Whatever you're risking, just look at it as it's already come out of your account, and just feel like you're already ready for the next trade. The reason why I say this is because your psychology will not focus on the loss. I know countless traders that will literally stare at the markets while it's hesitating around the entry point. And if it goes down a little bit, they're already scared and they're ready to come out. And then as soon as they come out, price just goes right into their target. And so that's what happens to a lot of traders. And so for us, we need to make sure that we are not like those traders and we hold. As soon as we enter, we have told ourselves that this is the plan. The plan is we either wait for targets over here to get hit or targets over here to get hit. If none of them targets get hit within a set number of time, obviously you can leave. Let's say, for example, price is just, hesitating around here, by all means, leave. But guys, let's say, for example, price is just hesitating over here, by all means, if you feel like you have to leave because you know that market's probably going to go down, leave. But if you have a set stop loss, just leave the trade alone. Just let the markets do its thing. A lot of us are putting so much pressure on ourselves when it comes to the markets, and we don't hold our trades. And so even like I've seen a bunch of traders where they will take profit over here, even though their target is all the way up here. But then when price is so close to their stop loss, they will not leave the trade. It's like you're doing the complete opposite. It should be the opposite. Cut your stop losses and hold your take profits. Hold it as much as possible, but have these 3 rules set in place. So I'm going to repeat again. Making sure you have your take profit at either a key level, a next liquidity level, or at a certain 1 to something risk reward ratio. Now, for me, I like to have all 3 confluences. Obviously, like I said to you before, if the key level is a bit too wide and, the risk reward ratio is still 1 to 3 with the next liquidity level, you can always have it like that. And you can always have, TP1, TP2. And so doing that is going to ensure that you have a better outcome to your trades. And everyone out here, you guys all need to understand that you need to have some sort of exit plan. We always focus on entry, strategy, risk management, focusing on our mindset. But what about exiting? What about exiting this singular trade? What about how is this trade going to affect you in the next trade? How is, if I risk too much on this trade, for example, if I put my stop loss all the way down here, will that help me for my next trade? Let's say price did come to my stop loss. Am I ready for the next trade, or have I just blown the account? So we need to understand, and I can't stress this enough, guys. Trading is as simple as you either win or you lose. Is as simple as that. There's no other way to it. There's no other thing to trading. We always trying to complicate things where, oh, let's move stop loss to break even and stuff like that. And don't worry, guys, I'm going to go more in depth for that on the second video or third video. But I really just want to focus on just you programming your brain to understand that we literally only have 2 outcomes. There's no other outcome to the trade. It's not like the trade's going to go sky high and make you a millionaire. It's not going to do that. So because we know that, we want to make sure our wins are realistic wins and our losses are, realistic losses. So if, for example, you have $100 account and you're trying to target all the way up to like here, let's say, whereas like 28,000 is like, does that seem realistic on a $100 account? Not really. Let's just try and get, a nice risk ratio and nothing too crazy. So guys, let me just go back. So understanding the 2 outcomes, either win or a loss, making sure you have an exit plan for the win or a loss, right? Our exit plan for a loss is very, very simple, and it shouldn't be complicated. You shouldn't make this section complicated. This section has to be like set in stone. You cannot change these rules. Maybe for this, you can change the rules, but guys, when it comes to the loss, you can't change the rules. You can't place a trade and keep moving. I remember I used to do this when I first started off as a trader, and every time price was getting to a level, let's say price came down to like here, I would like move my stop loss. Okay, let me just move it to down here and hold. And then price will continue to go down. And when it's here, I'll be like, okay, let me just put my stop loss a little bit lower just so that I can hold this trade. And I end up having a negative R trade. And then price will get so low to the point where I'm having, okay, I don't know why the market's doing that. I end up having a margin call and I end up losing the account because my stop loss, my exit plan was all the way up here. Why am I holding the trade all the way down here? Like, what is the point? I could have exited the trade up here, and I can just wait for the trade to make another move, and then we enter again. And guys, like, I don't want to put too much pressure on the exit plan, because the exit plan is always going to be as unique as the trade. But when you set these rules, you're going to realize that is actually way simpler than when you think, and you'll start to realize that you're not scared of your losses. Like, guys, you have to swallow that pill of losses. That losses are totally normal, and you can't just always expect to hold wins or hold losses all the time. Like, if price gets to a stop loss, just call it, call it even. The markets took your money. It is what it is. Move on to the next plan. Like, don't keep stressing on this singular move and this singular trade and expect this trade to do something for you. It's not always going to work like that. And you're going to realize that after like 100 trades, you're going to be numb anyways. So you might as well start practicing now, making sure that the trades that you take is proper trades. And if you get stopped out, it is what it is. And don't be scared of the outcome. Like, if you have a target, there's no reason why you've kept that target. So don't be scared of the markets and like close your trades early because you saw like a reversal candlestick. Like over here, price looked like it was going to reverse. Like, just hold your trade, like hold it. Even over here, like price was slowing down, you think price is going down, like just hold it. It is what it is. If price decides to hit a stop loss, it is what it is. It's completely fine, because you chose what kind of risk you were taking on that trade. And you understand that, if you lose this trade, you can probably have another opportunity later on in the markets. And another key note is, I'm just going to write this down, is the market always gives you another opportunity. So don't feel scared to cut your losses. Okay, like literally, guys, don't feel scared to just stop the trade on your losses. Like, don't feel scared, because what's going to happen is, if you guys always hold those losses, you're not going to have another opportunity in the market. You're not always going to have that next trade, because you've already blown that account on the singular trade that you had. So making sure you don't feel scared to cut your losses, like, it is what it is. Like, if it gets to a point where your heart's skipping a beat and you're like scared and you're sweating, just close that trade. Just literally, the market's not going to create structure. Like, I know enough times where price is going towards my like the opposite side, and I'm like, okay, yeah, price is gonna go up, and what does it do? It just keeps going down. Like, I don't know why we believe that the market is gonna go down, create bearish structure, and then suddenly skyrocket high. Like, this never occurs in the market. Okay, so if price is creating, let's say, lows, okay, we're getting close to our stop loss. Even if it was like here, okay, we're getting close to our stop loss. Should I just leave because we created lows already? Well, yes, I would leave. Even though my stop loss is down here, I would leave. Look for a better entry. Even if price does give me a trade where it goes to the upside, I now know that I can get a better entry. Maybe my entry was just poor. Okay, so the market always going to give you another opportunity. Don't feel scared to cut your losses. Like, guys, honestly, as a trader, we have to remove our emotions from the market. We can't always feel scared, because we don't know, because obviously we're looking at the money, right? We're looking at the money, we're looking at the money going up. You're probably $100 up, and you've done this one of the best trades, and the market's slowly coming down, it's creating bearish structure. Like, don't feel scared. Okay, I'm just leaving the markets now, because a lot of us will hold a trade, a lot of us will try and get this, try and get the massive win, and it doesn't work. And even like I was just explaining, even on the other section, if price is, let's say price did go up like this, and then it started to create lower structure, like, just leave the trade. Like, literally, just leave the trade, look for a better entry. Like, don't feel scared to cut your losses. However, even though I say this, don't also just leave the trade because you're seeing small movements here. Like, hold your trade. And I'm gonna be honest, guys, you rather might as well hold your trade and see what the outcome is, rather than cutting your trade short and then trying to force another trade. Like, just let the trade play out, because when you have a list of data and you see how your trades are, you will get to see, are you profitable or not? Now, if you keep cutting your losses or keep cutting your wins, right, you won't be able to actually see what your outcome is or what kind of trader you are. So even though I say yes, cut your losses, but like what I mean is don't be scared to. I'm just gonna draw it out for you guys. Don't be scared. Like if price decides to hit your what I mean by this is I don't mean price is hesitating here and just come out. No, what I mean is hold this stop loss till death. Like literally, do not move this. I don't care how close the market gets to your stop loss. Hold it because you never know. Price could easily just come down here, retest these lows, and then continue up. But so don't feel like what I'm saying is, oh, you can cut your losses here. That's not what I mean. What I mean is hold the stop loss as much as possible. If it hits your stop loss, it is what it is. That's what I mean, guys, okay? So just so that you don't get confused by what I mean by cutting your losses, I don't mean cutting it like early. I mean having that holy grail right here, like having it right there, set in stone, and don't move this wall. You don't see walls shifting because we need a larger stop loss or whatever. You don't see that. You don't see walls shifting. Your bedroom doesn't shift, right? Because you want something, you want a bigger room or whatever. Like it doesn't shift. So treat this like a wall that doesn't shift. And if price gets to that stop loss, it is what it is. You cut it, you go, you look for another opportunity. Likewise, if price is near take profit, just hold it. Unless you guys got like a zone, sometimes I do have a zone, then cool. As soon as it hits a zone, then come out. But if you have a set take profit, like you can leave early if you like, but if you're not confident with the trade, but if you see that okay, price is literally nearly there, might as well hold it, is what it is. If price decides to start breaking structure and come down, obviously take the trade. Don't be dumb, don't be stupid, right? Obviously take the trade, but like be logical with your trades. Like don't just close because of fear. Close the trade based on market analysis. Don't close your trade based on emotions, greed, fear, or FOMO, right? Don't do any of these. Close your trades based on either stop loss hit previous lows or you've hit one of these three, right? Literally, do not feel scared to like hold the trade as long as possible. If price does decide to crash down randomly, it is what it is. It's part of the markets. You keep going. Okay, you don't just, okay, I need to now chase this trade, get more trades in, and risk my whole account to make the money back that I had that was floating. Like, don't do that. Just be calm. Don't worry about the outcome of the trades because you only have two outcomes, and just let the trade do its thing. All of us as traders, we try to interfere with the markets, interfere with our trade and the setup, and then we end up ruining our own setup. If you have a crystal clear entry, you have a crystal clear stop loss and crystal clear take profit, let the market do its thing. Like, do not interfere with the market. Okay. Now, tomorrow, guys, I'm gonna go more in depth with exit strategies, a little bit more in depth, and putting a little bit more information out there to you guys because I want to split it into three because I have three ways to exit. But this is one of the easiest options for you, right? Two outcomes, one win, one loss. It is what it is. Obviously, your target's going to be there. Your stop loss target is going to be there, and here's your keynotes. Okay, so always place your stop loss first, and the market always gives you another opportunity, so don't feel scared to cut your losses. Okay, so that's pretty much the first strategy for my exit plan. And obviously tomorrow I'm going to go through something more advanced, and then I think I'm going to do another day where I go even more advanced, where you basically cannot lose within the markets, which is going to be pretty fun to show you guys. But guys, like when it comes to your exit plan, please, like make sure you have rules. Like I'll share my Discord server like a screenshot of my notes. Like if you have notes, write this down. Like key level, next liquidity level, and at a 1 to something risk to ratio. I like to keep it as 1 to 3. Stop loss always at previous low. So what I want you guys to do today for homework is, which I know I haven't really set proper homework in a while, but that's because you guys are doing really well so far. But today's homework that I really need you guys to do is back test and really practice your targets and your stop loss and understand why you've kept your targets there and why you kept your stop loss there. Really practice and see how it plays out. Like go back in history and have a look at your trade, have a look at the markets, and have a look and see like does like let's see what actually happens every time you see a setup, making sure you keep your stop loss tight and take profit at a certain level and just let it play out and let it see what happens. If you guys cannot back test, forward test, literally like next week, or we're on Wednesday now. So like for the next 2 days, literally just place trades on like a demo account and forward test, see how it works, see how it goes. You know, a lot of us can hold trades on demo accounts, but we can't hold trades on live accounts. So try and practice to make sure you, as soon as you place trades, you either don't look at the markets, like you go out, you do whatever you need to do, or even if you are looking at the markets, don't interfere with the markets, just let it do its thing. Doing that is going to help you way more than uh any other back testing that you're ever going to do in life. Okay guys, that's pretty much it. If you like this video, make sure you like the video, comment down below if you like this first exit strategy and if it works for you. And tomorrow we're going to go in depth, more like advanced, and then the third day is going to be more intermediate. Okay guys, but guys, that's pretty much it. Make sure you do the homework as well, because if you don't do homework, you're only cheating yourself. You're not cheating me, because I do this on a regular basis, and I've done this. I spent many years, looking at the best outcomes that I can have on a trade. So guys, if you don't do what I say, you don't do the back testing, you don't do the homework, you're only cheating yourself, you're only losing yourself, and it just shows that you don't really want it. So if you really want it, you are going to get it. So make sure you do the homework. Okay guys, that's pretty much it, and I'm gonna see you guys tomorrow.